Hello traders, you're welcome back to the Forex Geek channel. In this video, we are diving deep into a powerful concept that most retail traders overlook, and that is the stacked imbalance order flow. Now, if you have ever wondered how institutional traders push the markets and how you can spot their footprints in real time, then this strategy is for you. We are going to break down what stacked imbalances are, how they form, and most importantly, how you can trade them effectively. So make sure to watch till the end because this could change the way you look at the markets forever. Let us get into it. First of all, let us define what we mean by stacked imbalance in order flow trading. Now, in the market, every transaction involves buyers and sellers, right? But sometimes there is a major shift in order flow when aggressive buyers or sellers completely take control at a specific price level. We have a major shift in order flow. Now, a stacked imbalance happens when multiple price levels in a row show a strong dominance of either buy or sell orders. This means that at those levels, buyers are heavily absorbing all selling pressure or vice versa. You will typically see stacked imbalances in footprint charts, which display volume at price levels, showing where buyers or sellers are stepping in with aggression. So here's why this is important. When you see a stacked imbalance forming, it indicates that smart money is actively entering the market and price is likely to continue in that direction. Now, let us talk about how to actually spot stacked imbalances in real time. Okay, you can actually look at a footprint chart or depth of market feed. Right. So these tools show the volume traded at each price level. Okay. You can also identify a sequence of 3 or more price levels with strong imbalances in the same direction. This signals that institutional traders are heavily favoring one side, right? Then you should also confirm with volume, okay? Should confirm with volume. If the stacked imbalance is occurring on high volume, it is a strong signal that the move is backed by big players. All right. And then watch for follow through. If price respects the imbalance level and continues moving in the same direction, it's a sign of sustained momentum. For example, if you see a stacked buy imbalance at a key support level, right? You see a stacked buy imbalance at a key support level, it means buyers are stepping in aggressively and price is likely to push higher. On the other hand, a stacked sell imbalance at resistance suggests that sellers are overwhelming buyers, increasing the chances of a downward move. Okay? So now that we know how to identify stacked imbalances, let's talk about the best ways to trade them. For your entry strategy, when you spot a stacked imbalance, a stacked imbalance okay, when you spot a stacked imbalance, enter in the direction of the dominant order flow. If buyers are in control, go long. If sellers are dominating, go short. Then with respect to your stop loss placement, always place your stop below the stacked imbalance zone, okay, for buys and above it for sells, okay. This acts as a natural risk management level, since if price breaks through, the imbalance is invalidated. Now, concerning your um take profit strategy, use key support and resistance levels or liquidity zones as exit targets. All right, for your exit targets, should have been a great place for exits. You can also monitor the order flow in real time. Okay, if you see the imbalance fading, it's a sign to exit. Also, avoid fake outs. It is very important to avoid fake outs. Make sure to confirm the stacked imbalance with volume and price reaction. All right, a low volume imbalance might not hold, leading to false signals. Okay, so the key is to follow the institutions. The key is to follow the institutions, not fight them. Stacked imbalances show you where the big money is flowing, so use that to your advantage. Now let's quickly recap. All right, stacked imbalances occur when multiple price levels show a clear dominance of buyers or sellers. Okay, they indicate institutional order flow, signaling potential continuation or reversal zones. Use footprint charts and volume analysis to confirm strong imbalances before entering a trade. All right, and then always manage your risks by placing stops beyond the imbalance zone and targeting key liquidity levels for exits. Okay, so if you're serious about improving your trading with order flow strategies, then start paying attention to stacked imbalances. All right, because they provide a real-time look into market dynamics and can give you a major edge over other traders. All right, now if you found this video helpful, hit that like button and subscribe for more in-depth trading content. Okay, do not forget to turn on notifications so you never miss an update. Also, drop a comment below. Have you used stacked imbalances in your trading? What is your experience with order flow? Let us discuss. So that is it for this video. See you in the next one. Stay sharp and trade smart.